QuickBooks Online 2026, creating the balance sheet vertical analysis report. How? We're just taking the standard balance sheet report and doing some adjustments to it to give it that vertical analysis, giving the percentages that will be on the right-hand side, then discussing why would we do that, when would we do that, how do we use that report. So get ready and some coffee because we're meeting the deadlines using QuickBooks Online 2026. For the free QuickBooks Online sample company file, as we do every time, simply type it into our favorite browser, QuickBooks Online Test Drive, looking for that result that has intuit.com in the URL. Then, of course, we're going to have to verify that we're not a robot.
If I was a robot, I'd just type, "I'm not a robot," and be done with this caption nonsense.
That's right. We could just... It's ridiculous. This CAPTCHA stuff is ridiculous at this point. I don't even... Whatever. Let's go to the reports on the left-hand side. And we're going to then open up the major financial reports. Right-clicking on the balance sheet report to open a link in a new tab. Right-clicking on the profit and loss to open a link in a new tab. Let's then tab to the right. We're going to close up any pop-ups that may come up, and then we're going to change that date range to 2025, even though we're in 2026, because the data is still in 2025, and we're following the data. Follow the data. Do what the government don't. Follow the data. 010125 tab, 123125 tab. Let's tab it to the right and repeat that range. You can see that it's not in 2026, so we're going to bring it on back to 010125 tab, 123125 tab. Okay, so let's go to the first balance sheet tab. We're going to continue on with our analysis. In a prior course or section, we talked about the general outline in what you might call the ribbon, but that would be a copyright, so they want to call it the header section up top, which is giving you the editing information. But that's going to be the same for all reports, keeping in mind differences that come up from the type of report. 3 types that I generally categorize in, that being a balance sheet report as of a point in time, income statement type report has a beginning and ending. In other words, the beginning date changes the numbers. And the third type of report being a detailed type report, something like a general ledger, something like a transaction detail report, which by definition is basically always a timing report, even if giving detail about a balance sheet type of account, because you need that first date. You need that range to make the thing do what it's supposed to do. So let's go back to the first tab. Now, last time we took a look at what we call a horizontal type of analysis report. Now we want to do more of a vertical type of analysis report. So in other words, these are reports that are kind of like percentage reports. We're going to take advantage of the concept of percentages. Last time we looked at percentages over time, meaning let's compare this year to last year, for example. That is similar to performance that you might see in a job performance, like a baseball player. How many at-bats did they have compared to how many times did they get on base, right? We can count the number of times they've got on base, but we have to take into consideration how many at-bats they had, and we want to think, did they increase in the current year to the prior year, and so on. These are going to be percentage type of analysis. So the horizontal is percentage increase, percentage decrease that we looked at last time, in which case we need 2 periods of some kind, only 2 periods. We can't really do a subtraction of 3 periods unless you're doing, 2 columns at a time to subtract between them or something, right? So now we're going to do a vertical analysis. So how do you do a vertical analysis? So that means I want to compare every number in the column to to something that is the total typically. Now the balance sheet actually kind of makes more sense when you do that, when you think about it, but it's actually less common than the vertical analysis of the profit and loss. So we'll do the profit and loss later, but I want to at least get an idea of both of them at this time. So on the balance sheet, the 2 sides of the report are assets and then liabilities and equity. These are 2 sides of the coin of what the company has, what they hold on to, versus who has access to them or who has claim to them, either the bank, third party, or equity, which could be rewritten assets minus liabilities equals equity, as we saw in a prior presentation. Now, the assets then you can think of as similar to your personal assets that you might have in a savings account. So if you have enough money to be lucky enough to be putting it away and trying to diversify it and everything, all that kind of stuff, putting it in the 401k and whatnot, then you can look at your portfolio layout, trying to diversify it. And if I was trying to copy someone else's portfolio, such as a standard portfolio, for example, or Warren Buffett or something, I can't compare the dollars I have to the dollars that are in their account because they have more assets than I do. But I can compare the percentages. How much money do I have in stocks versus bonds, for example, most basically, and then how much money do I have in particular types of stocks and bonds. So that means all of my assets I can compare to the total asset. What is the percent of cash I have compared to all of my assets? What is the comparative of stock compared to all of my assets? That's a ratio analysis that will give me a pie chart kind of concept, and that should be somewhat familiar from an investing side. However, the objective here is different because on the investing side of things, it would be our personal books, which you can put into QuickBooks. You can put your personal books into QuickBooks and do that kind of analysis, but you would like to keep your personal books separate than your business books because you have different objectives. You might be able to do that with class tracking, but we have a whole other course or section if you want to get into that in more detail. But on the business side, you have a different objective. The assets are not there to live well or to accumulate upwards so that you have revenue or something to spend in retirement. We're not trying to compile the assets in the business. We only want the assets that we can have a return of investment on. In other words, if I have a bunch of cash in here, not helpful. If I have a bunch of money in stocks and bonds, but my business is landscaping, then I'm really putting it in the wrong place because I should be investing in stocks and bonds on the personal side of things. So in the business side of things, the question is, how much do I have invested in property, plant, and equipment versus cash versus other types of assets compared to the total, which I can compare to other businesses that are in landscaping. So again, I might not be able to say I have as much invested in property, plants, and equipment as my ideal, my hero of landscaping businesses that I'm trying to benchmark after, but I can look at the percent that they have invested in property, plants, and equipment compared to their total assets, and that could be useful. So that would be on the asset side. On the equity side, then this would be the other side of the coin. So this would be kind of more somewhat complicated ratio analysis in that we're comparing the total liabilities. How much have I financed? How much liabilities do I have in terms of a loan, for example, compared to total assets, which is equivalent to liabilities and equity. So in other words, how much leverage we're doing in kind of leverage ratio analysis on the bottom half. So that's going to be what the vertical analysis does here. On the profit and loss, it's a little bit different because you only have two kinds of accounts here. So typically the vertical analysis on the profit and loss isn't comparing the bottom line in the same way as assets and liabilities. It's comparing to the objective of the profit and loss, which is revenue generation. So that means I'm not going to compare everything typically to net income. You could, but that's not really what you normally want to do. You want to compare everything to income. In other words, every line item of income, I want to compare to income. We have a lot here. Usually there's not that many though. And that would mean each of these subcategories of income would add up to 100% of that income line. Everything below it, however, is not going to be compared to expenses. Typically, you could, but I'd rather compare all the expenses to income. I want to compare the expenses that I consumed in the objective of generating income to see how effective they are. And then I can compare that ratio is more useful to compare and benchmark to other companies that might make a lot more revenue. That's why I'm looking up to them. That's why I'm trying to copy them. They might be making a lot more revenue and have more expenses, but the ratio of how much they spend on certain expenses compared to the revenue generation could be something that gives me insight. Okay, so let's go back to the balance sheet. We'll talk about the income statement later. How do I do a vertical analysis? Now, just remember, like if I go to the first tab over here, we on the balance sheet reports, you don't have a vertical analysis, but I think they do have a profit and loss percent of total income, which is a vertical analysis on the income statement. So again, this is just a report that you could generate. It would be better for you to generate it because that usually gives you a better understanding of what the report is doing and allows you more customization of the report. We could also do a vertical analysis on a summary balance sheet, for example. So you might open the summary balance sheet, which you will recall is like the balance sheet, except that all of the account types are going to be collapsed, and that might be a little bit easier to look at. So it'll be like a less detailed report, but you're adding detail of another column, which might be a little bit nicer on the eyes if you had less length to it. You could have the best of both worlds by doing this balance sheet and then collapsing it if you can give the presentation live. But if you're giving them a report that you're going to email, then you're going to have to present it one way or the other. All right, so let's go on over here. We're going to say dropping it down, and all we need to do is say not percentage of the rows, percentage of the column. Percent of
That
the column. Bam. And if I go to the profit and loss, notice it's a little bit different. Like if I hit the drop down, now I have percent of row, percent of column, percent of expenses, percent of income. Over here, it's percent of income is most common. So if you do percent of column, it's going to compare everything, I believe, to net income. Weird. So you'd want to do it here, normal. Okay, so then if I go back on over here, but over here, you only have those options because we have a point in time report. That's how things are a little bit different in the functionality. All right, so now let's do a quick analysis of this and see if we understand what is happening, because what often happens is people make these reports, then at some point, the client or your supervisor or someone might ask you questions about it. And you're like, hey, why did I make it? Look at the color. I made it look nice. Why are you asking me questions about the numbers? No, we have to know the numbers because we want questions. You want to be to the point where you would like them to ask questions, and we will explain gladly what we're talking about. So let's try to collapse these to just the major lines so we can see it a little bit easier. So, and I'll collapse this whole bit. Okay. So now we have the bank accounts. So if I have $2,001 in the bank, I'm comparing that to my total assets, which is equivalent to total liabilities and equity. So the bottom line, you could say, is either total assets or total liabilities and equity. It's the same. So I'm going to say, all right, that means that this is going to be 2001 divided by 23436.29. And that's going to give me, if I move the decimal 2 places to the right, 8.54%. So that means that in cash, I have 8%. Now remember, most of the time, you don't want a whole lot of money in cash, because if you're just accumulating cash and you never expect to put it back into the business, it has no business being in your landscaping company area. Why? Because I'd rather give it to myself so I can either consume it, buying goods and services, or going on vacation, or so I can then invest it so it earns me money in the form of a 401k or a retirement plan, or stocks and bonds or something like that. Now, in a business, you might be accumulating cash for some reason in order to then take that cash and buy property, plant, and equipment in the future, in which case you might take the cash and put it into something like stocks and bonds that might give you a return in the short term, so that you can try to accumulate it upwards so that you can then invest it in the company. Okay, so then we've got the accounts receivable. That's how much is owed to us by the customers. So we've got 5281.52 divided by the total of 23436.29, moving the decimal 2 places over, 22.54% about, as we round 2 places out. So that means that's how much money is owed to us by customers. Now, again, I can compare that to other landscaping companies because this is a type of industry where I have to invoice people. And the question is, like if I have a lot of money in the accounts receivable and and I have a lot more percentage-wise than my hero company that I'm trying to benchmark to, then it might be that they are way more efficient on collecting the money. Right? And if that's the case, they have a better cash flow situation. They have more money. And if we're strapped on cash flow, we're most likely are not able to buy the property, plant, and equipment that we could need to optimize the revenue because our revenue is based on how much property, plant, and equipment and capital in terms of human capital, employees, contractors, we can engage. And if it's all stuck in accounts receivable because we're not getting paid by the customers, that would be a problem. So could we turn that over faster, right? And then other assets here, and then we got the total assets, and then we got property, plants, and equipment. This is the other big one because I can say 13,495 divided by 23,436.29. So that comes out to 57.58%. Now note, obviously, if you're in like a YouTube business and my only property, plants, and equipment is like a camera or something, particularly me, I don't even have a camera, right? It's a computer. Then my property, plants, and equipment might be very small. I mean, I might be able to like almost have zero property, plant, and equipment. For taxes, I might be, in essence, be able to write it off for the most part, right? So that means, so for that type of industry, I can compare to other people and we would have a little bit of property, plants, and equipment. But if you're in landscaping or construction, then you might need to invest in the equipment. That's the thing that's the barrier to entry to get you into the business. Is also the thing that bars other people from being able to compete with you because there's a barrier to entry. So then the question would be, how much do I have invested in, if I'm a landscaper and I'm comparing to my hero business, how much do they have in property, plant, and equipment compared to their total asset investment compared to what I have? That might give me some insights, right? Okay, so then if I go on the liability and equity type of side of things on the balance sheet, we get a similar kind of comparison, although possibly a little bit more confusing because this particular report is doing kind of a ratio analysis to total equity. Total equity. Go ahead, Ara.
It's actually dividing each liability and each equity item by the total equity, not total assets. So for liabilities, that gives you leverage.
Yeah, but it's total liability and equity, which is equivalent to total assets. That's what the vertical analysis is calculating.
Wait a minute. No. In QuickBooks, for the summary balance sheet, it's actually percent of total equity only. See? The top half, the assets.
No, but I'm doing a vertical analysis, which is a percent of column. So I have a standard balance sheet, and then I have the percent of column.
Ah, got it. So the standard balance sheet doesn't do any splitting tricks. Everything, assets, liabilities, equity, is divided by the same bottom line, total assets.
Right. Okay, so let's say, so then if I do liabilities, then now what I'm doing is I'm comparing my liabilities to total liabilities and equity. Total liabilities and equity is just the other side of the coin of assets, meaning who has claim to the asset. So we might think about total liabilities in general. Liabilities could include accounts payable if we have accounts payable, likely to include loans that we took out from the bank. How much leverage do we have? So I could compare then the 31131.33 divided by either total liabilities and equity, which is the same thing as divided by the assets, right? Divided by the 23436.29, and that's hold on a sec. Okay, so it's greater than my assets. That's great. That's just great. 31131.33 divided by 23436.29. So it comes out to 132%. If I move the decimal over, that's not good because I have more liabilities than my total assets, right? And that's so not likely I'm going to be able to get another loan based on what's currently in the business, given the fact that I have more liabilities than my assets, right? So again, you might not have any liabilities if you're in a small business, right? If you're just a YouTuber, one of the benefits is you don't really need to take out a loan because you don't need any property, plant, and equipment or inventory. Therefore, you don't have to take on liability, which is why there's not much barrier to entry, which is why you have so much competition. But if you're going to buy property, plants, and equipment in a construction business, now you might have to take out the loan. And then the question is, what is a reasonable amount of loan compared to asset value, which you will get some information on by the bank, who won't give you a loan unless you have a decent amount of assets and possibly put some of those assets on the line as collateral. But the general idea is that I can compare, I can't compare the total loan to my benchmark company that I'm trying to mimic, but I could compare my percentage, right? And say, what does my percentage look like? And that might give us information. Similarly with the equity. Equity is my claim. It's assets minus liabilities. It's the owner's claim, whether that owner be one person, multiple people for a partnership, or a corporation, shareholders. So in this case, it's negative, right? I have a negative comparison because my equity's in the hole. So that's pretty not good. So my equity compared to total assets is negative 3283. So what the heck, QuickBooks? Why don't you give me a better picture of a sample company? This is depressing. Oh.
Well, they named it Test Drive, not Success Story.
Test Drive. I want Success Drive.
Same. But hey, at least it's realistic. Most businesses do hit a rough patch. Lucky for them, we still get paid whether they...
I was trying to support them here. So we could divide by 1,000. If I was gonna adjust this, I'm gonna round to the nearest whole number. And then if I hit the drop down, I can put negative numbers be bracketed, and then I'll make them red for external reporting. And then if there's any zero numbers here, there's a zero. If it's external reporting, I'm going to say, no, get rid of the zeros. No zeros, dang it. And so now that one is gone. So it's a little bit cleaner for external reporting. Most people probably don't do that because they don't know about that. And if you do that, some people might not notice it, but they might not know, but they'll know in the back of their mind. And then they will like you for taking the effort, even though they don't know, but they know. So we've got the header. So the header report period. So we have the report period up top. That's still legit. So company name, that's good. We'll center it. The footer, let's get rid of the footer. We don't need that. Get rid of that. So we'll go boom and get rid of the footer. All right. Don't get rid of your foot, but get rid of the footer. The footer. I want to keep my foot, but get rid of the footer. All right.
And don't forget.
Okay, and then we have down here the name. Again, I could change the name of bank accounts to to cash and cash equivalents and so on and so forth. Then I can change the name over here. I might not want to call it just a balance sheet. I want to call it a vertical analysis balance sheet or something of that nature. Vertical analysis balance sheet. Now you could get like crazy and do a comparison of the vertical analysis for multiple periods, right? I could say this year compared to the prior year, vertical analysis. So now I've got, right, but it doesn't work perfectly, right? So the vertical analysis, if you were in like zero, for example, it actually has a little bit more sophisticated tools that allow you to kind of do that kind of stuff. But it's a little bit harder to use. So there's a trade-off. I'm not trying to say they're better, but in that, more, they have more customization. So vertical analysis. Now, again, I would like to possibly export it to Excel because I can get rid of this. I might not need this as of in this date range here. And then I might want to do some, customization beyond that. And I might want to save this by going to the drop down here. Again, they've removed it. So I could save it to a management report. Normally, I would like to just basically memorize it, possibly under the standard reports that I'm going to generate monthly or quarterly, for example, over here, and then going into the reports, which would be the custom reports, so that then this will be easy to generate every period that I want to generate it. So if it was in here, all I would have to do is open it and then change the dates once it's open, and then maybe I can email it, but then that's going to be multiple emails. I can save it as a PDF and give them access to a PDF folder on like a OneDrive, or I can put it into Excel once again. So let's export it to Excel. So we're going to say, how do I do that? Export to Excel, por favor. And then I'm going to say this is going to be the vertical analysis balance sheet. Okay, let's open that up. So now I have in my folder now. Oh, now it went to the wrong spot. Where did it even go? Dang it. I just assumed it was going to the right spot. That's what you
Check your down.
That's what you get for assuming stuff. And it won't let me get it there. So hold on, R. Let me think. It tricked me. Okay, I'm so gullible. Okay, so then let's say we're going to put it into here. Well, maybe I'm going to say
Download.
Copy this and put it here. Okay, so this is going to be vertical analysis balance sheet. Okay, so let's save that. And
save.
Then let's check it out. Okay, so now I have two of them. I'd like to put these in the same worksheet, right? So I'm gonna open up the first one, and let's just open up this bad doggy, and then I'm gonna save it again. I'm gonna save as, and then I'm gonna save as, and take this the month, or let's just call it year-end reports. Year-end
done
reports. Okay, and then I'm going to go okay, and then so I have this one. Why is it doing that? And then so now I want to go here and say I have this one. Now let's add the vertical analysis to that. So now if I open the vertical analysis, I want to copy this over. I have two reports open. I'm going to right click on this tab, move or copy, and then I'll hit the drop down and say I want to go to the year-end reports, create a copy. So go boom. So it moves it over there. And then I'm going to delete the one I was just on. So now I have two tabs here. I'm going to pull this tab to the right, and I'm going to double click on the tab names. This is a comparative quarterly and quarterly comparative balance sheet BS. And this is going to be a vert BS vert analysis. And then I could do so then I can do the same thing. I'm going to go to this tab to see where my cutoff is, and over here. So then I'm going to say I don't really need this. Going to delete that, and maybe I don't really need as of. Maybe I get rid of as of, and then I'm going to underline. I'm going to stop this thing from showing up because that annoys the crap out of me, and go always show ribbon. Maybe I'll put some underlines here just for formatting's sake to match what the other formatting had. So I'll put some underlines instead of the long underlines. Right there, underlines, and then and then and then and then underlines, and then underlines, and then maybe I put the borders around this. Bad doggy. All borders.
Bold border.
And then boom. And then maybe I unborder this one. Why is that there? Don't like that. Maybe I make this black and white for the header. Black and white, and so on. Maybe I make this smaller. So I'll have these the same size, maybe.
Black and
Like that. And now I have too much space on the right, so I'm going to right click over here. I'm going to insert on this side, and then I'm going to select this side and make them the same distance, but enough so it goes to the end bit. Okay, so then if I go to the, so that's just a little formatting. If I go to the printer, now I've got two, right? I've got the vertical and now so now I want to see the entire report, print the entire worksheet. So now I've got the comparative, I can print it. It has 2 pages to it, and then the vertical analysis, which has 2 pages to it. I can print it to a PDF file by using a cute PDF printer. I believe this is free. I'm not advertising for them, but I use it, and it seems to hasn't caused me any bugs or anything. I don't think. People might be spying on me right here, right now. I don't know because of this, but I don't think so. So I think we're safe. So then it gives you that. Now notice the header, the distance of where the headers, and you can mess with that because the normal margins combined with what I did with the headers to make them even might not have been perfect, right? So you might mess with the margins and whatnot or something, but I'm not going to go crazy on it. I'm not an expert. I'm just saying you could make it look very nice and more unique using different colors, different fonts with fairly little effort if you get the system down. So I'm going to close this out. Also note that I could then put these, once I get the PDF files, I could give someone the PDF files as well. So let's say I add this, or let's say I print this as a PDF. The other way to give this to someone is to give them a PDF, which you can hit the printer if you want, and that still opens the PDF thingy, and then save as a P to the D to the F. And then this is going to be a vertical analysis. Okay, it's going to the right spot. I'm not going to trust it this time. I don't trust it. I'm going to copy and paste it because it burned me last time. I don't trust no one. Trusting's for idiots. I'll make sure that I have it. Okay. There it is. So now I could put all of these files this way. Now notice if I put them this way, I might want to number them, rename and number it so that once they're here, they'll be in order, right? So this might be my first report that I show, and then the next report is going to have a different number so that when I then give them the access to the file, it's not all jumbled by alphabetical order. Instead, giving them the order of opening it that I would prefer. If I attach them to an email, I would like to attach them in the order that I would prefer. Or if I'm going to group them together in a folder that I'm going to provide to somebody, I would like to zip the folder so that when they open the folder, then it'll have the reports once again numbered, so it will be in the order which I would like them to open it in. Otherwise, again, you're giving them something that's a little bit messy, and they're going to think worse of you, right? They're going to be like, something's wrong with this guy. I don't know, but I know that there's something just fishy about this, and but so you want to give them like good vibes by having well formatted stuff and then numbered, and then give it to them on one PDF file or maybe like a folder that they can access, but then it's numbered so it's not all jumbled all over the place.
And if you really want to impress, drop the folder into a password-protected zip. Then they don't just feel organized, They feel
Safe
safe.
is good too. Safe and organized. Both of those are difficult in this world. They used to drive me crazy with all these people trying to hack into, poor accountants are being targeted all the time. So protect yourself out there. There's a lot of people attacking the salt of the earth, the bookkeepers and the tax preparers, and they're under fire, Ara.
Tell me about it. They don't steal your money, they steal your sleep.